Welcome to The Missing Link, a podcast where crypto and insurance come together. I'm Dan Roberts, and my co-host is Danielle Wall-Elliott. Whether you're in crypto, traditional finance, or in need of a new podcast, The Missing Link will help you explore the vital role that insurance plays in crypto and how blockchain will disrupt insurance. Join us on our journey to find the missing link. Hello, a fantastic Missing Link podcast this week with Sebastian from Chainproof and Quantstamp. He speaks about the woes in the early days with all these bank robberies, online bank robberies, starting with the DAO hack, getting him involved in the space, and the rest is history. The work and education that him and his colleagues have done around bringing the incumbents up to speed. There seems to be a lot more going on there now because of that. He speaks about the lack of regulation around auditing. You can't technically pass an audit. It's an ongoing process. And of course, he gives his thoughts on a few missing links. The main one he says is controversial, but I would agree. He is a fascinating, very well-experienced individual that we're happy to have in this space. We hope you enjoy the conversation.
All right, we're in for a treat today with the next episode of The Missing Link. Sebastian is here representing both Chainproof and Quantstamp. So we're excited to talk about the offering for both of those. Chainproof's offering of insurance to the smart contract economy, and the Quantstamp, doing the nice audited smart contracts. Nayms is a partner with both of those entities. And so we're excited to kind of discuss this opportunity within the smart contract ecosystem, and practice what we preach, especially with insurance and, being an audited crypto smart contract platform, and, understand that we are promoting a more mature ecosystem. So welcome, Sebastian, and Dan. I think you'll introduce him more fully here.
That's right. Yeah, Sebastian, it's great to have you. This is the part where I explain how relevant and important you are to the space. So by means of introduction, Sebastian is the CEO of Chainproof Digital Asset Insurance, the world's first regulated insurer for non-custodial smart contracts, a global leader in Web3 security. And you used to be the managing director, or you are the managing director, of Quantstamp in Germany. You hold a PhD in computer science from the Technical University of Munich, where you focused on software protection, all wildly relevant. Before joining Quantstamp, it sounded like you worked as a security specialist at BMW, Philips, Deloitte. So you've certainly had done your time at some larger corporates. It would be great to hear about some of those journeys, how they led you to the world of digital assets and insurance and all of those things. I think I speak for everyone in our network when I say that we're very grateful to have you joining the problem solving that's going on in this space. It's certainly no small problem to solve, and no small opportunity for the space to really embrace with open arms. And we really love the approach that Quantstamp and the affiliate with Chainproof bringing. It feels like it's been a wild 12 months. The sort of settling feeling that's going on in the moment. I thought I'd start by asking how are things. How are you guys feeling over on your end in this nice sunny August?
Yeah. Hey Danielle. Hey Dan. Thanks a lot for having me. Thanks for the great intro. We're feeling pretty well. I feel like things are picking up. Looking good. So indeed, it's been quite an eventful, I guess, it's 15 months now, starting with the Terra crash.
Yeah.
I felt like that was when it all started.
Yeah.
Last year. It was around the time when we got our license from the BMA officially issued. And thank you. Yeah. And it was like the sandbox license, and we really felt last year was a difficult year, many potential customers that we were talking to were affected both by the Terra crash, but all of the dominoes that came afterwards, right? Like, it was like Three Arrows Capital, Celsius, a bunch of others. And in November, the big one fell, like FTX, right? That was really, the cherry on top,
Nice
So,
juicy cherry. Yeah. What
exactly.
state was Quantstamp in during that time, which has obviously been around for a lot longer? What state was Chainproof in, at these different stages? And, what was your, headspace at the time? How involved were you in those kinds of events?
So, like, Quantstamp actually was in a great position. We closed our Series A right before the Terra crash. So it was like just a freshly minted unicorn, and was in a great position. So no worries about that part. It was actually getting a lot of audits even after the Terra crash. Chainproof, on the other hand, was just starting up, right? And our target was institutional customers, quite different from Quantstamp. Like, Quantstamp can take any kind of customer, crypto native, most of them, and also institutions sometimes. But with Chainproof, we went the regulated route. So not building a unregulated coverage provider, but like a regulated insurance provider for DeFi risks. And we knew from the get-go, this is going to be, or it's not going to be something that crypto natives want to buy, right? It's too much of an overhead. So we purely focused on B2B and institutions. And we did see institutions getting scared by what was happening in the space last year. So yeah, it was quite a difficult year, but I would say, like, starting at the beginning of this year, things took a turn, and we've been seeing more and more interest from businesses in buying insurance for various reasons.
Yeah, we all know it's a risky industry to be in already, but then to see those risks become reality, over, like you're mentioning, over the last 15 months, it's definitely been a nod to the insurance industry of what's so powerful that we can provide, in this risky early days of crypto.
Yeah, we love talking about the kind of two, areas that you span. It's insurance and digital assets, and they don't have to have any overlap at all in most conversations, but in ours, that's the full overlap, and so never a dull day, particularly last year. Glad to hear you're seeing things settling. On the note of those two, categories, what we like to do pretty early on is just give the audience a sense of, where your expertise sits and how that's grown over time, with a kind of quick fire where you would mark yourself 1 to 10.
We've had other guests say, like, well, if Vitalik is a 10, I was like, oh, okay, I like that scale. We'll put him up there.
I think the context is, we love speaking to insurance professionals that are starting to learn about the different types of crypto risk and bringing that expertise into the space, and vice versa. People who have a very deep knowledge of crypto, but maybe are learning about how insurance plays within that space. So just a sense of how you might see yourself. We're not going to judge you for being overly confident in any of them, but it's a nice balance to see what sort of guests we have.
Got it. Yeah, I guess, like, if we're talking about mostly people who are specializing in insurance and starting in Web3, I would definitely rate myself as a 10. If we're talking about Vitalik being a 10, then I would not rate myself as a 10. Right?
Well, yeah, I think that leads nicely into, maybe you could tell us more about your journey. Dan mentioned a few big name companies that you worked at, before. Obviously, you're very scholarly and having your PhD in computer science. So can you just tell us about your journey? Like, what made you want to get into this Web3 space? And then, how you joined as CEO of Chainproof now.
Yeah, of course. Yeah, the journey. starts somewhere around the DAO hack, right? I remember I was on a train ride from work to home when the DAO hack was happening, and I was pretty shocked about how easy, like someone that could be anywhere in the world, right? It was even like difficult to trace. It took years for people to trace down who the hacker was. It was so easy, someone sitting in front of a computer can just look at this code, which was open source, find the bug, exploit it, and get away with, like, at the time it was around 50 million worth of ether, which is now way more, right? But like, it was jarring. I was thinking, wow, in hacker circles, or just as kids, people were just joking about, oh, how would it be if, what would you do if you won the lottery? What would you do if you robbed the bank, right? And this was robbing a bank, online. Yeah. And it's much like, at the time, it seemed like way less risky because you weren't going physically into the bank, So, and then you didn't have the cops chasing you, right? So it was a different sort of thing, right? And that's where it started. I was already in security for many years and started looking into it. And then I was lucky enough that one of the early advisors of Quantstamp was my second supervisor for the PhD. And he introduced me to Quantstamp. And I, immediately fell in love with the team, right? I quit my corporate job and decided to jump into crypto full time. So at the time, people were calling me crazy, like, oh my God, you're just like, you're quitting a full-time corporate job, which many people would consider their dream job. Like, there's so many people who retire from that job, and they're happy. Especially, because I'm based in Munich and BMW is based also in Munich. So it's sort of like where many people gravitate to. And then I was going to a startup.
You got a little setup.
Yeah.
Yeah, there's a lot of benefits, right? But like, there's also things that I personally didn't like about my job, right? So coming in crypto and seeing such a innovative and fast moving space was just like, for me, having done my PhD, it was like, oh, okay, I want to go there, right? So this is where I would feel happy with what I'm doing, right? And I started at Quantstamp in 2018 as a Solidity developer, and I was building actually something which internally, it was never launched officially, but we built like a insurance, crypto native cover sort of thing, right? And we tested it and we figured out, oh, this could be pretty interesting if we launched it, right? But due to regulatory fears, we never launched it. But it was really well built, well tested, together with, I think, 7 other colleagues from Quantstamp. So we put quite some effort into it, but we didn't want to just, have that as a wasted effort. So afterwards, we started talking to insurance companies and telling them like, hey, Quantstamp has this great expertise in assessing risks for smart contracts. And we also, we're dabbling with insurance, right? And we wanted to convince insurance companies to, put capacity behind us, right? Behind, the Quantstamp risk assessment. And they were way too scared and didn't understand this, right? At the time, I remember I was talking to insurance companies and showing them, if you know, this website called DeFi Score, I think, or something like that. And the total value locked in DeFi was under $1 billion. It had never gone over $1 billion. And I was telling people like, this is going to be like hundreds of billions in a few years. And people were like, no way, forget about it. Like, it's never going to be like hundreds of billions and whatever. And we weren't successful convincing insurance companies until 2021, when we found Sampo. and Sampo was really into it. We were talking to the right people there, and we were lucky to like have them support us with an initial investment. And we also, at the same time, in parallel, we're also talking to Munich Re. And Munich Re, we had a very long relationship with them. We were doing due diligence, technical due diligence, and at some point they said, "Okay, guys, we think you guys know how to do risk assessment for smart contracts. The only missing piece is an insurance company. We need to find a primary insurance carrier which is willing to take on this risk." So at the time we were like, okay, now we have Sampo, we have Munich Re, but like Sampo wasn't prepared to just write this directly on their own paper. So we decided to do something like a joint venture between Quantstamp and Sampo. And that's how Chainproof was born. And we incorporated in Bermuda at the recommendation of Sampo. And we started working on our business process. So, business plan for the application. And then fast forward about 6-8 months, we got our license. Yeah.
Just a quick backup. Before the Sampo and Munich Re engagements, you were speaking to insurance companies to convince them. Was there a feeling like they really wanted to understand it but didn't, or that they did understand it but didn't like the risk, or just didn't want to know? What was the mix there?
I think all of that. Like I felt like there were some people that had already made up their mind that crypto is bad. There were some people who were thinking like, oh, these guys are so young. They have no idea what they're doing. They want to insure the price of Bitcoin. That was one.
We get that a lot.
Yeah. And there were people
we should issue a statement. No one is trying to insure the price of Bitcoin. They're hedging products.
That's a classic.
Yeah,
that's a classic one. Yeah, I got that so many times. And then there were people who were willing to learn, but then they were too afraid somehow. They were like, "Oh, I would learn this if it were coming from a very trusted source, but like you guys could tell me anything to convince me to take my money," sort of. Right. And there were just very few. Like we really needed a strong recommendation from the inside. I was lucky that one of my friends, shout out to Siegfried from Munich Re, who I was, I was friends with him during our PhD, and we did our PhD at a similar time at different universities on similar topics, and we knew each other. He recommended me to speak to someone from the Munich Re team, right? He was in Munich Re, a very trusted person, and he just made a recommendation, right? And that went, I felt like a long way, because we had spoken to Munich Re a lot of times before, but just not maybe with the right person, or, they didn't trust us because we didn't have an internal recommendation. So,
I think that's that's a big process here, is that, with any kind of enterprise interaction, these large corporations, particularly with a new, and you add on the risk element to this whole space, firstly, you have to get in touch with the right person, which can take some time. Then they have to build up their own, their own consensus on what stance they're going to take, independent of you. They've just been introduced it. Perhaps they've been introduced it, indirectly through you. And then you have some individuals, maybe some of the younger, recruits that are driving their own career within these large institutions, that are building up a thesis on why this kind of thing should be taken seriously by more senior management. And then you get more buy-in there. They start, what we've seen with some, particularly, some of these brokers, they start, hiring very decent digital asset teams. Again, all with these kinds of businesses as the type of companies that they want to engage with. But you almost have to, wait and educate and hope that they can build their own individual thesis. And that's much more powerful. It's like, we want to do this because we see an opportunity, instead of you being convinced by a scrappy startup to that this is a big opportunity. So you guys have done, we've spent a lot of time in that world, and you guys have done a lot of that effort as well, which we're very grateful for. Because you then start to see that education paying off, and these companies, I wouldn't say they can move quickly, but they can move at scale, and they can move with a high level of torque, in the right sorts of directions, and can really embrace some of these, more developed, sophisticated solutions. So it's hats off to you. I was thinking we should have these, maybe we shouldn't have these like cheesy radio sounds every time someone says they leave their corporate job and come to the crypto world. We should, exactly. Some audience cheer. But it's the same with, shout outs to these individuals that can make these kinds of introductions, because if you take a long view, then it's very, very exciting what we're seeing some of these larger companies, really leaning in. And so, that's really great to hear. Something I'm very keen to, to highlight, and, perhaps you can expand on how you guys are seeing the interaction between Quantstamp and Chainproof is, just a pioneering in the digital asset space of kind of preventative security type approach versus insurance reactive approach, and how those two work in tandem. It's a great kind of interplay of value propositions that can bring more peace of mind, and also I think Danielle will dive more into this. Just what we've experienced firsthand is how you are able to put your money where your mouth is. You're able to back products and secure them, and then take the risk that's left over. So perhaps you can expand on, a little beyond the kind of Sampo and Munich Re piece of how Chainproof came to be, and how Quantstamp and Chainproof work together, and how useful that's turning out to be for clients.
Yeah, totally. So that is something that we've been hearing from Quantstamp customers, I think from inception, right? Everyone was asking, is there anything like insurance that we can buy after an audit, right? And this started happening more and more as people saw projects that got, various audits from various, top tier auditing companies that got hacked, right? And we thought, okay, we can just build some crypto native thing that offers some kind of cover, but we don't want to get in trouble, right? On the long run, we really see this these companies as successful in the long run. Therefore, we wanted to take the slow, regulated way in, instead of the quick, let's just build something, put it on chain way. So this has had a tremendous impact on Quantstamp's business, because we now have customers directly asking for insurance, and when they ask for insurance, we say, okay, we can only insure you if you get an audit from Quantstamp, and this audit proves to be good, right? Because this is something I feel like is one of the biggest misconceptions in the Web3 space from a security perspective. The misconception that if you have an audit, it means that you're secure.
Right.
It doesn't mean that, because there's no regulator in the space to force a project to fix the issues that were found during an audit. There's no such thing as passing an audit, because an auditor is not a regulated entity. It's not a regulator. There's no regulator, right? How can we talk about passing an audit? Projects just buy an audit. They buy it, right? Yeah. They get a report, and that's it, right? I feel like the word audit is misinterpreted here, because it's actually just a security assessment, right? we use audit because, it has to do with financial stuff. So it sounds, but it's not really an audit, because no one is regulated here. Neither the project nor the auditor, right?
How many projects just like keep changing the code after they get the audit as well? So they can say, hey, we were audited, exactly, but that's this one point in time. And then, almost immediately they can change something that could introduce a vulnerability.
Right. That's a very good point, right? So because of that, we definitely urge anyone who's deploying funds in any project, please do check, on our audit report and many others, they have the commit hash, which was audited. Of course, the tricky thing is how to check that. It's not straightforward. You don't just click a button and you see, oh, this matches the code which is on chain. So of course, there still needs to be tooling developed in that direction. I guess like another thing which is very important is that if you look at audit reports, not all the issues are fixed, most of the time. So you look at an audit report and we've had situations where we found 20, 30 issues, right? And I think there was at some point during DeFi somewhere when everyone was in a rush to deploy, there was someone who said, like, we don't care. We acknowledge everything. We just want to launch tomorrow, Yeah. So they just launched, acknowledged everything, said, hey, we have an audit. Yeah, I mean, like many people deployed. So they got a huge TVL in the end, right? I don't even want to think like what happened afterwards. I don't recall which that project was exactly, or if they did something or they didn't. But definitely those kind of things, they don't go well in the end, right? So I think that what we're doing with insurance right now is we're able to play a bit of play a bit of hardball, in the sense that we say, we won't insure you unless we really feel like your project is secure, right? So, this comes as a bit of a shock to some projects when we talk to them. They're like, oh, so we could pay for an audit, and in the end you would say like, oh, you're too risky to insure. That's of course a big if, right? So we really want to work with projects that are very serious, that have very mature development teams, like yours. Actually, today is the day when when this is recorded is the day when we're publishing the blog post about our partnership as well. So we wrote this blog post about how much effort you guys put into securing your platform, and there's not a lot of projects out there that do as much effort as you guys.
Ooh, that's music to my ears. I can't wait to hear more about it. And that's something that it's always been so important to us. Like, we don't want to be custodians of funds. And so we like to say we're non-custodial, but at the same time, we are the builders of the smart contracts that hold the funds. And so in some way you are still responsible and you are still, you need to take it very seriously. And so that's why, we have gotten other audits in the past, not just from Quantstamp. But I think a lot of times those felt very much like isolated, kind of like what I mentioned earlier, kind of a one and done. Thanks for the audit. You can kind of post that on your website and, show it as this badge of honor. But it kind of ends there. Whereas, we felt very much like we've been able to align our incentives with you guys. And, it's almost like we have, like someone has our back and someone cares about it into the future, not just this one-off project. And, I was on a live stream about like an introduction to smart contracts, and with a lot of people who are in this space, who've been in this space a long time. And I started telling them about what we've been doing with you guys, and that it's not just this one-off. It's like, okay, we've made another change. Hey, can you guys check this out? That's part of our terms in our insurance policy. Another thing that was in our insurance policy requirement from you guys was to put up our bug bounties. We use Immunify. I think that's another way to align incentives in this space. You're trying to attract the right types of people to find your vulnerabilities and bugs, rather than, the wrong person that's just going to take it all. And so I think that, as an ecosystem, especially in the crypto and digital asset space, like if we align incentives in the right way, we're able to have each other's back a little bit more, be a community that cares about security and puts that first. So the process has been, well, I don't want to say easy, but easy enough. So that's been great. So thank you for that. And would you kind of maybe just give us a glimpse more into, we're one of your clients. How many other clients do you have? Like, how are you seeing this scale right now?
So we're seeing a lot of interest in this. We have a lot of customers in the pipeline, actually, and it's a pretty lengthy sales cycle because of all the security that needs to be put in place before we can actually give them a policy, right? So I would say at the moment we're seeing, around half a dozen really good candidates. Of course, we get, like every day we get people asking us either via our website, Telegram, all sorts of communication messages asking us about getting insurance for some smart contract, right? Either that they're building or that they're using.
Mm-hmm.
Right? But of course, like without going the extra mile of adding all of those security countermeasure or measures in place, we can't help them, right? And there's of course also like the fact that since we're regulated, we can't just go off insuring entities all over the world, right? We need to stick to jurisdictions where we are able to issue licenses. So that's also another roadblock of being regulated. Where we are working and talking to fronting companies and that kind of stuff to help us expand where we can offer coverage. But yeah,
and you mentioned earlier that
you
mentioned that TVL number in DeFi, and I just looked at DeFi Llama. It says 41.75 billion TVL right now. Like, how much do you think is insured of that amount? If you had to take a stab at it, or percentage?
0.5, I think, right?
Yeah.
I think something like that. Yeah. 0.5.
And so, Sebastian, I mean, on a couple of those final pieces that you said and Danielle's question, how do you think about, particularly as a regulated business, how do you think about your own distribution? Are you looking at embedded solutions? Are you, is it more traditionally driven? It sounds like you've got an influx of demand that's not too much of an issue. How do you see that growing? And we're excited with DeFi about embedded insurance. It's not something we focus on, but we see people becoming a larger topic. Do you see the regulated piece as a restriction to that kind of distribution, but it opens you up to larger business? How do you think about that?
It is a bit of a restriction, but I feel like so what we do is that we have very bespoke policies for customers, right? So with embedded insurance, I feel like you need to have it very, like one-click sort of thing. Right? You don't negotiate too much regarding the terms, regarding what's covered, what's excluded, and a bunch of other parameters, right, that we negotiated. So I feel like there's definitely a big market for embedded coverage insurance. We are building something which we're going to launch in September in that direction from Quantstamp. But that's pretty exciting. But I feel like when you're offering this kind of very bespoke policy, you can be very flexible in terms of pricing, and I feel like the biggest barrier right now, and what we're seeing in insurance in this space, is that everyone wants to buy it. But when people hear about what the price tag would be for their, wish list, they're like, oh my God, that's a lot. Right. So what we're able to do with like our approach is to cater to their needs, take some stuff off, adjust some parameters such that we reach a premium that is attractive for them and makes sense. And that's what we're doing with most of our customers, like they they come to us, maybe they have an insurance policy offering from a big company that covers some part of what they need. And it's, cast in stone, making a change to that policy would probably take years, and for us, we're a very lean organization, so we can make those kind of parameter adjustments really easily. And that's, I feel like, what our customers, like what our business customers really love. Yeah.
Gotcha. No, it's great. I mean, that 0.5% figure really gives an indication of the upside, but it also gives an indication of the challenges, because it's, far lower than it should be at this stage. And, I'm sure you feel the same. When we started Nayms, which was 4 years ago, the market in terms of insurance felt very different. It felt much more nascent, and the level of education felt much, much lower. The amount of activity going on at the moment is just day and night different, and expansive, and grows every day. But that 0.5% figure isn't a whole bunch higher than it was. So it'd be interesting to see how much what is being built at the moment is really poising us for that figure to go up. And it's not just the percentage of insurance protection on DeFi assets. But as there's all sorts of other business lines in this space that can see more and more protection. So we're very excited to see how you guys develop there. As we're called The Missing Link. We see this podcast as a important exploration of what solutions are perhaps not provided to the digital asset space, and that if they were, it would bring a huge amount more adoption, security, trust to the space, which is inherently about security and trust. And so we'd love to extend the question to you. What do you see as a missing link? It doesn't have to be insurance or the Quantstamp Chainproof solution, although I can probably take that for you, that we see what you guys are doing as a missing link. What would you see as another missing link in the space?
I'm going to say something which not many people agree to. Perfect. But I think in order to have mainstream adoption, we need a lot more clarity from regulators. Regulators need to put in the laws that are going to regulate this space, such that insurance is made, this mandatory car insurance. There should be some mandatory, DeFi insurance maybe. There should be, the regulators should come in maybe and say, if you get an audit, you need to fix the issues that are found during the audit. Otherwise, you're launching, like a ticking time bomb, that is going to lead to a lot of losses for many people potentially. So I feel like there should be someone in, this is not going to be a central jurisdiction. It's going to be different in different jurisdictions. I really like what is happening in the EU. There's a lot of regulation being passed in a good direction, and it's already talking about mandatory audits for projects that launch. So that's, I think, the thing that needs to happen all over the world in order for mainstream adoption to be a thing. Because once that happens, there's no more fear. I feel like right now when I'm talking to people, I tell them I work in crypto. They fear crypto because it's unregulated, and they feel like, oh, if I'm going to put my funds in there, they might just go away the next day because there's some ban on crypto, in whatever jurisdiction they are. So, if you get clarity, there's no longer this fear. It becomes a real, legit asset class, and businesses can thrive. So I think that's sort of the biggest missing link. Of course, with the user experience, user experience is definitely something important. I feel like now with account abstraction, things are going in a great direction. With the rollups, everything's becoming faster, easier to use. You don't need to use your cumbersome wallet to do stuff. Sometimes, you can just, you don't even know that the blockchain is behind it,
Right. It sounds like in the world of this long chain, there are a few missing links, which you've touched on there. So yeah, I really appreciate your experience and your expertise. As we mentioned at the beginning, it's great to have you, in the charge, and companies like Quantstamp and Chainproof putting these things forward. So yeah, thank you so much for the work that you've done with us, and for the discussion today. We've really enjoyed it. Me
too. Really appreciate it. Thank you so much, Dan and Danielle.
Yeah, thank you. See you soon.
We're one step closer to finding the missing link. If you enjoy our show, please rate and review us wherever you get your podcast, and be sure to come back next month. Until then, we are the missing link.